Hi, Warriors. Fed Week. Who's ready? Hi, Alexander. Hi, Shahab. Adozi, welcome to our community. Nice to meet you. Bran, yes, I'll lead us into the abyss once again. Hey, Ryan, how are you? Kirsten, nice to meet you. Welcome to our community. Mike Delfino. Hey, Ryan, how are you? So, I was trying to make something out of what's happening in the currency action, but before I do that, I really have to give a tip of the hat to our fearless leader, Blake Morrow. On Friday, he showed a harmonic pattern in the S&Ps when we were up here that it was completing, okay? And that was, we were still up here above 4,500. Big break Friday. It's almost like everything that happened during the week, that Friday was the whole week. And the way we closed was pretty negative. In fact, we're re-entering the throwover again on the S&Ps. And there was some pretty negative action, even in things like Amazon. I'm short. NVIDIA. There are people marooned on NVIDIA Island. And I don't think Gilligan or the skipper are going to come and rescue them anytime soon. Called about $9 lower. So, the poster child for AI needs some AI. Anyway, all right, so let's get to the currencies where I have not a lot of conviction. Maybe you could guide me here, Ryan. I mean, you traded it well. Who really traded it well was Cayman's just been sitting short euro for a while. I look at this and it doesn't inspire me to buy it. Looks like a little flag here. But yeah. I have a hard time wanting to get short at 662. So yeah. I'm doing nothing. Do you have anything going on? And
yeah, I'm short. Yeah, I'm short a bit. It was okay. I was looking at that what happened at 107 over the ECB.
Right.
And so I jumped. I'm in a short, just 78. So not that great a position, but I'm holding it. Yeah, it's holding the 107 for now, but it's not pushing lower, which is the concern. Fed one test.
Any big data before the Fed?
Oh, yeah. We've got the housing stuff tomorrow. It caught me on the hop now. I need to have a look.
Oh, okay.
We've got to start some housing stuff. There's no big data though. There's no game-changing type data. Housing starts, that sort of thing. So,
it's interesting you bring up housing, and I know it's here we are. We're not talking currency. What's the name of our company? Let's see. Anyway, I'm looking for the housing ETF. I have something up here. I have Hovnanian or something, but they got hit, and they were one of the strongest sectors actually. Here's Hovnanian. Okay, they all look like this. So they all came off. They've been explosive. Everyone waiting for a real estate crash, and home builders have actually been leading. So I don't know what finally tipped them over. And okay, so housing starts. What else, buddy?
Just that's it. I think housing starts.
That doesn't inspire me.
No.
So it's everything's a Fed this week, and that's Thursday for guys
Wednesday.
like me. That
Wednesday. No, it's Wednesday. Yes, Wednesday for everyone.
Okay. Yeah. All right. I don't know. I thought I heard someone say Thursday. All right,
if
Ryan,
you're in Australia.
Oh yeah, that's a good point. It's like happy hour somewhere. Right. Any commentary on the yen, Ryan, before I ask K-Man about it? What he's thinking here?
K-Man's not here because he's got a power cut or something going on over there. We've had some bad storms over the weekend. Dollar yen, it's looking like a lot at the moment. We're treading water a bit. we had that little break above sort of 85, 86. It couldn't motor on. We're back below it now. It's resistance again. So all the hard work's got to be done.
Well, you know, we did not confirm this time up, which is what I was looking for. You know, I shorted it into the gap. It turned into nothing, you know. Max pips were, you know, 60.
Yeah, I tried the break of 85s last week, Friday. I thought this might be a little bit of a pop, but it couldn't even get up to 148 properly.
Yeah, but it is starting to look like a 1, 2, 3. But we could have a fractal up here, right here, and this could be 1. And how do I look for fractals of longer term 3 drives? Of course, I reduce the TF, right? So maybe go to like the 30-minute chart, and you see we confirmed here, which implies that there could be another high. And 15 look like that too. No, it looks like, you know, just sideways consolidation for another run, doesn't it?
Yeah, probably, you know, we're 147 to, you know, call it 148 until we get to the Fed and see what pops up from those guys.
Okay, so the yuan looks like it's, you know, I was looking at it last week and I could see either we had a 3 already. And I think it's interesting that it, you know, it kind of led the yen up, didn't it? You know, it was the leadership during this rally phase. Much, you know, they traded hand in glove, but yuan was stronger.
Yeah.
And the last few days, yuan's been weaker.
There's a story out that the banks are recommending using the yuan as your funding currency now for your carry trades rather than the yen. I don't know.
Okay.
Which won't be good news to China, which is probably why they've held meetings with a lot of banks and financial institutions today about FX. You know, I don't want them promoting everyone piling into you know, shorting the yuan or borrowing in yuan to go carry trading elsewhere. So
who recommended that, right?
Goldies, TD, Invesco, and someone else.
Okay.
Citigroup, obviously. Citigroup always got their finger in those sorts of pies.
Yeah.
So they reckon that's the carry trade to use now. Or the funding currency to use.
You know that China will screw around with that.
Yeah, that's what I was saying on the flow show. It's not one, you know, with the yen. You know that they may intervene, but it's not to put a hard brick wall in the place. It's to get rid of speculators and volatility. So they can intervene. It can still go to 150. But if China wants to put up a brick wall, well, good luck trying to break that down.
And it's so much deeper too, volume-wise, etc. Right?
Yeah.
So I mean, so they're recommending you do carry trades with a thin, you know, sometimes illiquid currency.
Yeah, exactly.
Wow. I want their job. all you have to do is be wrong and get bad advice.
I'm not saying that's the reason why it's ticking up again, but it's stopped going down again.
Yeah. So anyway, I'd be on the lookout for a failing rally here, especially if the yen makes a new high and the yuan doesn't. That might be interesting. But
I'm going to look to add to my shorts if we see 731s, 32s. I might add back. I'm short up near the top, so I'm happy to stay short on this one.
And precious metals, you know, had a nice little run last week. Gold leading it, silver led it, but nice run. I'm not a believer that this is the higher low to launch us to new all-time highs. I'm more in the camp that this is going to be a failing rally, and I still think we're going to take these 1885 lows out. And silver was real strong for a while. It went to the top of the rectangle, so you know we had a false breakdown. We haven't managed a false breakout, so you know, between here and 23.5 is good resistance. I'm still looking for a 20 handle, under a 21 handle in silver, coming down the line. And, you know, Go ahead.
I
What?
was going to say back to your gold. You know, we're holding that 1930s 35 area solidly as
Yeah.
well. So that keep holding that, it might get you your lows down towards 1885. I'd be a buyer down there.
Yeah.
1885. It's a big solid level. You can see it there on your chart, and it just marks the bigger $100 range, 1885, 1985
Yeah.
that we've seen of
Okay.
late. So yeah, I'd
Yeah.
be a potential buy down there, but there's enough levels in
That's
between.
an important
1900.
level.
Yeah,
Here's more confidence for you. It's a 50-week.
yeah. There's a fib there at 94, I think it is. I've got
Yeah.
off.
So that's going to be the big test. If it
Yeah,
doesn't hold that, then I think we go to the 200 week,
yeah.
low 18s.
I can see
And
that.
that's probably about the magnitude of the dollar rally. You know, a long time ago, I was talking 108. You know, I know we're not there yet, but we're closer to 108 than we are to, you know, when we were all the way down here.
Yeah,
So, you know, this move is what, 2/3 if it stops at 108. I mean, I know guys talking 110, 111.
yeah,
So, you know, we'll see. But, you know, the big takeaway for me is I don't know exactly what I want to do in the currencies. The thing I have the most conviction of is sell any rip in equities. You know where you're wrong now. Maybe there's a Fed-induced rally because they do nothing. But to me, it looks real vulnerable. And I know this is gonna, you know, Blake's gonna give me a hard time about it, but I'm looking for 4,200 by mid-October around the annular eclipse.
Oh my God. Is it going to be a full moon or is it
Oh, the solar eclipse. And from certain certain places in the country, there's a ring of fire around the moon.
Jeez. Well, you know, as
Yeah.
long as we don't get full moons from Ryan, I think we're all going to be just fine.
well, I was going to
All
say,
right.
if you've had a curry, there'll be a ring of fire, definitely.
Yeah. Anyway, you know, that's Johnny Cash. Johnny Cash did Ring of Fire, didn't he?
Yep.
Yes.
All right. I could
Yes.
do it, but I won't. Anyway,
Oh.
so
Save it for
anyway,
Fed Day.
okay, yeah, that'll be a Ring of Fire, that's for sure.
So
For Paul.
So Dale, you're expecting 4,200 by mid, like literally within a month from right now.
Or maybe a week.
Huh?
Maybe only a week. The sooner it gets to 4,200, because I think there'll be a battle there,
Yeah.
the more bearish it is. If it stretches it out and doesn't get there for a month, you know, it's, you know, that's probably showing some internal strength that it's going to take that long to get there. I think it could get there in a hurry.
Well, I'll tell you what,
actually,
volatility is actually popping this morning. You know, you know,
that was a great
mind,
that harmonic chart. Show it to everyone. That was a chart of the month for me. You know, because I was starting to waver a little bit. You know, we have a strong dollar. You know, why is the market continuing to, you know, rally into my face? And the minute you put that chart up, it started declining.
Thank you. And we can blame
Who? Andre?
Options expiration on Friday.
Oh yeah.
It was options expiration on Friday, but yeah, this is the harmonic pattern that, you know, showed the reversal there. But you know, we also blogged about it too. So it was on our blog, and it was the chart of the day here on the 14th.
It was
so you guys can all see, you know, what it looked like, you know. And so it was a good setup, and didn't mean to do that. It was a good setup, and it reversed. Now the problem with today's market is, you know, we got the Yom Kippur, or Rosh Hashanah, excuse me, holiday, and that goes till when? Friday? When's Yom Kippur?
Yeah,
Friday.
No, I think Saturday.
Or is it over the
night? Yeah,
I'm sorry. It was
Sunday.
It was last night. Okay, is that right?
No,
or it's over until next Sunday?
Well, the Yom Kippur is usually a week from.
Okay, so it's supposed to be this week. you know, and a lot of people are selling into that, you know, that's like because of a seasonal aspect of it. But regardless, we were actually closing, or we're actually breaking on Friday. We're breaking through those lows, or at least probing them. It's a big support zone in the S&P right here. And we have so many central banks. I mean, there's 13 central banks meeting this week alone. I mean, it's a massive amount. So there's going to be a lot of volatility just regarding that. I mean, and you look at some of the moves that might develop, you know, following, you got the Fed, you got the BOJ, you got the Bank of England, you got the Swiss National Bank, you got Norges Central Bank, Riksbank. We have China. They'll make decisions on their 1 and 5 year rates. There's a lot of central banks meeting this week, and it's going to be, you know, there could be a lot of volatility. And as I was just mentioning, the VIX, if you look at VIX is up. It was up 5% just a few minutes ago. Now it's up 6.3%. So volatility is rallying from support, and so these are levels that you could really see, you know, maybe, you know, put some pressure on the markets. So
a lot of black swans when they happen this time of the year, you know, October.
You know, what would be a black swan? I mean, you know, Ryan, you've been up for a while. Dale and I, you know, we just dragged ourselves out of our slumber over the last couple hours. But you've been awake for a while, at least enough to think about what kind of black swans do you think could be swirling around the markets right now?
Oh, really? You got to think about the consumer. You know, black swan. Well, I wouldn't call it magnitude, but you know, you've got the mortgage problem here in the UK when rates bite. I think rather than global black swans, you're going to be looking at maybe country-specific black swans. You know, something like that, where the problems are going to pop up from higher rates. You know, is the US consumer going to get hit? You know, we had that retail sales last week, which looked good on paper, but then gasoline sales did most of the heavy lifting. Core sales were flat. And, you know, who knows where the black swan may be, maybe in jobs. Suddenly, finally, that tips over and causes some wobbles.
Right. Well, I guess the black swans are the ones that we don't see. And as Carl says, swan lives matter. Yeah, swan lives matter. So let's, I think that was funny.
Maybe we have
stock
a
buyback.
Government shutdown in October.
What's that?
There, you know, McCarthy recommended impeachment to satisfy the, you know, far right in his party to try and get, you know, some kind of bill passed so we don't have a shutdown in mid-October.
You know, that's entirely possible. I don't know if you guys I don't know if you guys are watching it this morning, but what happened with yields today, Ryan? Because right out of the gate, well, it looks like sometime in Asia. If you look at the 10-year, 5-year, 2-year, they all popped and they eased back. Did you guys get a read on why that happened?
Nope. I think it's either a fat finger or just someone with an order going through at a wonky time of night. But
wow, it got to 545.
Yeah. This is the 2-year, but this is crazy. Wow. I mean, I noticed it when I got up, and I'm like, huh, what happened there? And, you know, mentioned it in, you know, the ForexAnalytix chat room, and Mark, you know, so Mark, you know, came up to me and he's like, yeah, I don't know. There's right here. You know, when I posted the chart, you know, I was like, I don't know what happened there, but it was sometime in Asia. And Mark was like, yeah, it's not clear if it was a data glitch or something. And so, you know, it was really interesting. But I'm sorry, Ryan.
For some time though, that's the thing. You know, usually these things is like a 1 second, 2 second thing, but it carried on for a bit. You know, it is a very illiquid time. Globex, I don't think had been open long, so you know, it's just maybe one of those funky things that screws up all your charts.
Right, but so one of the data you know, maybe moves that we haven't seen, but it's worth watching, and this is like one of the last charts that I posted, is the boons. I mean, you know, you got boons that are, you know, threatening a really big breakdown here, and if they break down, I mean, it's opposite of yields. I mean, opposite of, like, I say opposite, it'll be complementary to US yields, but if you start to see, you know, boons just, you know, drop like that and yields start flying, I mean, you know, we're in breakdown territory. I mean, it's, you know, we should be noting the fact that is that's a realistic possibility there. So yeah, I don't know. I think we should be watching yields today. So maybe somebody's giving us a clue, Ryan, on what might be happening here.
Yeah, Fed's hiking in 50 pips on Wednesday.
Yeah, there we go. There we go. So speaking of which, so how do you feel about this week, and which central bank do you think is going to be the one worth watching aside from the Fed? I mean, I know we all know that the Fed is you know, might create some volatility, but how about the Bank of Japan or the Bank of England or the Swiss National Bank? I think the Swiss National Bank, they're expected to raise rates, but what if they, you know, what if they don't, since inflation's already below 2%? I mean, you know, could that send the, you know, Swiss like aggressively lower? I mean, you see that thing's coming towards the 200-day moving average. So what do you think here?
Yeah, I mean, the S&P's it's a wonky one, the most manipulated country in the world at the moment, outside of China. Yeah, they are expected to hike 25 pips, but then their inflation never took off like everyone else's, so it's back around target. So might they pause? The Bank of England, I think, is going to be one of the ones to watch, because obviously, are we one and done, or are they going to be worried about inflation? We get the inflation data on Wednesday, so that's going to be hot. Could chop things right around for expectations.
And how do you feel about the sterling? Because we did close below the 200-day moving average. I mean, that's kind of a big deal. I mean, we closed on the lows this week and below the 200-day moving average. So, you know, obviously price action is pretty, you know, things trading damn heavy. How do you feel about the sterling here?
If you look at it on a shorter term, come down to something like a 15-minute, you know, compare that to euro dollar. You know, the breaking cable was 124.50. That was the breakdown, and it's then gone on to make a newer low this morning. Whereas euro dollar had its break of 107, made a low, hasn't gone back there yet. So it's looking a bit iffy for the pound. But you know, this can flip around if we get a really hot CPI report, and CPI is expected to go up and the core come down a pip. If it's much hotter than expected, then probably a hike is going to sound a bit more hawkish from the Bank of England. If inflation's down, then we probably get a hike, and it's pretty similar to the ECB, where that'll be it from the Bank of England, and we move on to trading when the arse is going to fall out the UK economy.
Yeah. Okay. All right. Well, you know, and okay, I'm with you on that. You know, Tony just said something and asked something really quick. Is everyone here convinced the Fed won't raise, you know, obviously this week? I think they will, because Jay Powell is a very political creature, and he wants to create his damage well before the elections. And Tony, I don't know. I don't think the Fed is much for surprising the market. So when the market's not anticipating this, I think he'd rather not surprise the market. That would be my view. He's no Alan Greenspan. For those of us that had traded through the Greenspan era, you know, those days are past, you know, where we get surprises, I think. I
don't know. I've got a higher expectation in the market, like I did for the ECB.
Do you?
Yeah, I mean, I'm probably about 30% in favour of that they may hike. That's my surprise.
Well, let me put it to you this way: I wouldn't be short the dollar into the Fed. I actually have, if you've been following my analysis for the last couple of weeks, it's just, well, for most of us, just buy dollars, but trying to buy dollars on pullbacks. Because I want to be long dollars going into the FOMC. I sure as hell wouldn't want to be short, but I still don't have expectations that he's going to surprise the market and hike. If he does, this dollar index, even though it would be a dovish hike, the market still has to reprice. So we will be trading above 106 in a situation like that, I think. What do you think with that, Ryan?
Yeah, you probably see a similar reaction to the ECB. We get a knee-jerk pop higher, It'd probably be a bigger reaction in the dollar than it was in the euro, because those expectations for the ECB were much higher going in. We're still, 99% probability that the Fed don't hike. So if they do hike, it'll be a big shock. And then once the market senses that's probably the end of it, the last one, rather than one later in the year, then we'd probably start reversing on that. But it all depends on the message. The two inflation reports that have been higher are a bit of a concern, even with the core coming down. So it's all going to be about the message. If they hike once and that's the end of it, then you've probably got a bit of a top going to form in the dollar. If it's
and
a
here's
hike,
the other thing. Oh, go ahead. I'm sorry.
Say if it's a hike and they're still worried about inflation, and they keep another one on the table, you're probably going to see a bigger upside reaction and it stay more bid.
Well, let's talk about this jobs market. I mean, the jobs market is ridiculously resilient and strong. And if there's one thing that's going to keep inflation from not coming down, it's the jobs market. And I mean, even the weekly unemployment claims last week were, what was it, 220,000 or something like that? It was a beat. And maybe Jay Powell does want to Tony's point, maybe he does want to stick a fork in the economy and at risk of the economy just to take out inflation. And I think that's what most central banks, they're in that camp. Like, I don't care what happens to the economy, I have to bring inflation down below 2%.
That's why I said the ECB had a good chance of hiking. It's not about growth right now, it's about inflation. I've got a question for you.
Go ahead.
I've got a question for you. The jobless claims, that includes people who have gone on strike, doesn't it? Do they get classed?
I don't know. I'm not
sure. There's an unemployment category. I'm just thinking, because we've got jobless claims this week and we've got all those car makers on strike, whether that's going to skew the numbers on Wednesday.
Yeah, I don't know. But that's a big union. I think Dale's part of that union.
I've let Jimmy off as illegitimate child.
Huh? The TDU, Tea Drinkers Union.
Tea Drinkers Union. That's it. Dale's in the Astronomers Anonymous union. Just kidding. Dale, I know I love to harass you about that stuff. But no, for Dale, do you know the answer to that question? Because I don't know if the union, I mean, that obviously the UAW is huge. It's a big deal. Obviously we'll be hearing a lot about that if it is, Ryan. And that's definitely worth exploring. But the fact of the matter is the dollar is strong. One of the things but you look at stocks, and stocks aren't really going to give up the ghost here unless you start to see economic data weaken and give us an idea that we're in a recessionary type of period or getting close. Let me double check something really quick. Do we have data that's coming out this morning? I mean, I think we might have minor data
in Canada.
Okay. All right. Let's we're going to take a look at that here in just a second. Especially speaking of which, since the dollar Canadian just hovering around the 135 level, the one thing I do want to, I was just mentioning, one of the things I wanted to cover, just in case you missed it last week, is just keep an eye on copper. I think copper, I tweeted this last week. Everybody probably follows me on, if you follow me on Twitter, you've seen it. Copper is in the apex and it's tightening of this wedge or this triangle, and we're going to break out, upside or downside. And I think this is going to be a very good indicator to tell you if the market is pricing in a global recession or global expansion. It's going to be seen right here in copper. I think copper is going to show us the way. So we are obviously ready to break out. I mean, this is a daily chart, and you can see it has literally been in a consolidation since 2022. So I think it's worth noting. All right. We have, you said Canadian data coming out. Let's take a real quick look at the dollar CAD, because we're just probing that 38% retracement to 135 level, very critical support. I've been playing long off of this 135 level for the last, couple of trading sessions, and we're right on support here. The 200-day moving average isn't far below. You can see a lot of support. So we'll see if the dollar CAD might give us a little bit of a move. But you have Larry coming in, right?
Yeah.
Yeah. Larry's good. He'll give you a good view of, different sectors of the market. So, and a good technical view. And he's a very, how should I say, kind of,
Good tactician.
yeah, objective
Hot.
looking market participant. Well, I'm sorry. What did you say, Ryan?
Hot PPI data.
Okay. All right. So let's see if the dollar Canadian can give us any bit of a move here. I think everybody's probably just waiting for other central
Fed.
banks. Yeah, because the BOJ is not, BOJ, I'm sorry. Bank of Canada, they met last week. So
I don't think the dollar tops until Canada trades above 140. 141 is actually a target, I think.
Ooh, man, that is that's a call. And 141 would be above this channel. And one of the things that we have to look, and I know you're gonna go on with Larry here in a second, is that the dollar CAD's held up very well. Even when the euro, had this massive, rally from, subpar, the dollar CAD's held up very well. So, if we finally get some crude oil weakness, which I'm not expecting until the mid 90s, but if we start to see some crude oil weakness, we could actually see the dollar Canadian pick up a little bit here. So anyway,
yeah, Blake, I think the commodity currencies, like with the action we saw last week with Aussie being up on days when euro was weaker and cable was weaker, is kind of a precursor. And I think that Aussie will bottom before the euro and cable, and Canada, the Canadian will bottom, but USD CAD will top. Commodity currencies, I think, could be the leaders of the next dollar decline.
They could be, but I'll tell you what, you look at the Aussie dollar and look how it's reacting to, you just match it up against the S&P here.
Yeah.
And this is a pretty good, give you a pretty good idea. We've seen this nice grind higher in the S&P, and the Aussie is just traded really freaking heavy. So
yeah,
it's not trading well with risk, which is a risk for the Aussie, right? So
yeah, I'm not saying here.
Yeah.
So I want to see where Aussie is at when Canada's 141.
All right. Well, Ryan, hey, thanks for being here. I know K-Man, he had Bran, who's listening in, made a funny joke in the chat room. He said the cable's been cut or something like that. It was, little cheeky Bran comments in our chat room earlier. Anyway,
Putin cut K-Man's cables today. Oh, wow. All
right, Ryan, thanks for being here, and happy Monday to you guys. It's going to be a really busy week. We'll be here all week, obviously, and Dale the jokester will be here all week as well. So
yes, I promise.
Dale, have a great interview, and thanks everybody for tuning in today. I'll flip it over to you.
Yeah, thank you, Ryan.
Thanks, mate.
Thanks, buddy. And Blake, great chart last Friday. Really,
thank you, sir.
Call, Larry. My trading warrior brother, how are you?
Good, Dale. How are you doing?
Doing good, Larry. So, we were just talking about your style. I say that you're a very good tactician, and Blake talks about your objectivity in the market. With you follow your rules with your moving averages, etc. And so it'd be great to have you here because. Do you think we had a little shift in the last few weeks, and Friday give you any kind of message, or just write it off to option expiration?
It's a good question. Friday, I'm not sure yet, because the week going into Thursday morning, the week was going pretty well.
Yeah.
S&P was higher for the week. NDX was higher. Thursday was an 80% up day in both of the indices. But then Friday, they just took everything down. So I don't know yet. We're going into the next 2 weeks. I think everybody knows by now. Traditionally, the next 2 weeks are pretty weak seasonally. Yeah. Now, that doesn't mean that it's going to happen this time, but I will say that they really stopped the two indices in their tracks on Friday. So I just want to see what happens today. I think bond yields in the US dollar are really the big story.
I agree. And, looking at this S&P chart, is it, you know, you have to respect how well it's held up for up until now with a strong dollar and higher yields.
Yeah.
So what would happen if those reversed is what, you know, it would probably really fly. You have any expectation? Go ahead.
Well, so bond yields, the 10-year, it's right up at resistance, 433 in October, 436 recently. So the Fed, the market is pricing in no Fed rate hike on Wednesday. But you know, I just really think it's going to come down to bond yields. If bond yields fail here and they can't get through 436 and they either stabilize or start to pull back, then that's, you know, better for stocks. But if they break out for whatever reason, then, you know, it creates a lot of weakness.
Okay. All right. And they've been trading, like, you know, the yen and yields trade hand in hand. So this is a big week for rates then. Because when I look at the TLT, and I'd like your opinion, Larry, like the weekly TLT.
Yeah, let's dial that up.
Still looks ugly.
Yeah, it does still look ugly. It's, you know, it's the exact opposite of the bond yield chart. So TLT, it's just in a downtrend for me. And I know that, you know, a lot of people trade shorter term, and I get that. And there's probably some opportunities that could be here. But for me, from a trend perspective, unless TLT's over 108 to 110, there's not a lot there for me. But it could bounce. You know, the biggest question is what's going to happen with bond yields. And I could sit here and make an argument on both sides.
Yeah, with the 10-year, it's easier to make the case that they're about to come in, but you look at the long end and they still look like, you know, we're going to gun for those October lows. So here's what I'm thinking, Larry, that if yields are going to slow down or start to come in a bit, that it's more on the short end than the long end. And actually, you have experience. I'm going to ask you this. Everyone's been worried about the inversion for forever.
Oh yeah.
So that could be steepening action with the front end rates coming down faster or stabilizing, but long end rates keep going higher to take out that October low. Wouldn't that be yields steepening, the curve steepen?
I've got to tell you, it would, but you know, most of the time I pretty much have like some type of a basic view, you know, long or short, that I can put together based on the charts. And I've got to tell you, as far as the bond market goes, I don't, you know, if bond yields were 20 basis points higher or 20 basis points lower in 30 days, it wouldn't surprise me. But I really can't sit here and tell you that I've got any real technical insights as to which way it's going to go. The 10-year chart itself, if the 10-year chart was a stock, I would buy it, right? Okay. It's in an uptrend, weekly moving averages. But I will tell you that this 436 resistance, it's pretty major resistance. Okay. You know, with the Fed, the Fed's probably on hold right now, at least for Wednesday. I think the market's pricing in, you know, maybe 25 basis points in November, but nobody knows. It's based on how the data comes in. Last week, CPI was higher, but core was lower. And I'm just a little bit more defensive. I've got a little bit more cash, not too much. And I'm holding energy is one of my biggest positions, but tech is also one of my biggest positions. So I'm a little
semis.
What's that?
Semis?
No, I've got Triple Q, I've got Nvidia, but I've got Google, which was a recent buy. you know, in
that's
communication services.
one of the Magnificent Seven that's still holding up. I don't think that I think a couple of the Magnificent Sevens lost their duels. I
Yeah,
think Apple and
Apple's the weakest.
yeah,
Nvidia is weak, but
yeah.
then, you know, Google, if you look at,
Microsoft failing rally.
yeah, you know,
Look at
it's not,
Microsoft. Yeah,
tech is not the strong in the big seven. It's Google, which is communication services. It's Amazon in discretionary. And I'll tell you, my favorite chart here.
I'm short Amazon from
Yeah,
late last
my
week.
my favorite chart here. If triple Q, if it turns up, right, is Tesla in that
Okay.
group. But
Yeah.
here's the thing. I don't know that triple Q is going to turn up. So I've got, you know, I've got a smaller Google position. I've got
Okay.
some Meta for, you know, the past 6 months. We've got some Nvidia for a long time. But yeah, no, there's a lot of weakness. The Nvidia chart is weaker. You can tell just by, you know, very, very wide ranges. And I don't like to see the very wide ranges, especially near the pivots, because that usually indicates a lot of weakness. But,
Okay.
you know, Nvidia is weaker. Apple's definitely been weaker. And Apple tried to turn it around. But then with the China, you know, restrictions, it created some weakness. But listen, I've been over the past 30 days, I think I've had the least activity as far as buys and sells of any 30 days over the past 18 months.
Okay.
Because I just don't know.
Yeah. Okay. And what's that usually a precursor of? When you're inactive like that, it doesn't tell you what the outcome's going to be.
Yeah. Yeah. All
right?
it tells me right now is, you know, like energy's in a strong uptrend, but energy could be a little bit extended, especially crude oil. You know, crude's had a run from what, 77 to 90 recently. But the weekly crude chart is a great chart. The 40 just turned up. Everything looks good here. But in the short term, after 77 to 90, if it pulled back to, you know, 85, it wouldn't be bad. It wouldn't be unexpected. But, you know, there's just a lot of uncertainty on the, I liked the industrials quite a bit. And then they pretty much got taken down really sharply last week.
Yeah. What a key reversal.
Yeah. Yeah.
The uranium sector has been performing. Have you, do you trade issues in that sector?
You know, we've had it on our buy list. I don't have any uranium. I've got a lot of XLE and I've got some Schlumberger, but yeah, uranium's been very strong.
How about the weed stocks have come out of their hibernation?
You know, they have, and it's a good chart. It's not a group that I follow too closely, but yeah, the weekly chart looks great. Now, it's gone from 5 to 9, so it's important for your listeners that when I say something looks good or bad, I'm looking more, you know, weekly time frame and, you know, the 2 to 4 month trend. I'm not looking so much short term.
So you know, it's hard to buy a double.
Yeah, so you know, could it pull back from here? It could, but if you look at the long-term trend, I mean, the volume is massive. First time over the 40 week. Yes, I mean, there's a lot of money that's coming in there. So I think it's one, you know, if I was trying to get into a group like that, you know, I would probably buy small and then wait for a pullback to try to buy some more.
Okay. Anything in the miners?
In gold miners?
Yeah.
Not yet. You know, I think, and you guys are a lot better with gold, you know, than I am. But I really think that until bond yields come down and the dollar comes down, you know, this is just a choppy group. There's probably a lot of trading opportunities, but if you look at the trend, the weekly chart's just a tough chart.
Okay. All right. So home builders have been leading the way. They've been one of the strongest sectors, Larry. I think last time we were on, I think you were long some home builders.
Yeah.
They've given up the ghost a little bit.
Yep. Yeah, so there's a lot of things I think to be a little bit more cautious about it, at least right now. Like home builders, if we look at the black line,
Yeah.
it's the 20-week moving average. It had held that going back to what, last October, closed below that bearish moving average cross here on the weekly. So the home builders, I think, are showing some caution signs. Semis showing some caution signs right now. But, you know, if you look at the weekly chart for semis, if we look at it, it's at the top end of the range. There's support at 143. This, Dale, I've got to tell you, this is the macro environment is probably the trickiest of any that I've seen in 25 years.
Well, that's saying a lot.
Yeah, because you've got inflation that's still very high. The dollar has been breaking out, but then the yield curve is extremely inverted and there's a lot of fear of recession. So, I mean, you know, you've got two trains going 100 miles an hour in separate directions.
Yeah. Yeah.
And I don't know what the answer is.
Yeah.
What's that?
So it's kind of like it's bifurcated.
Yeah.
It's hard to have a bullish narrative in this environment.
It's
except for momentum.
Yeah. Energy is very bullish.
Yeah. Okay. Yeah, I hand you that.
Yeah. The energy group, you know, you take a look at charts like Schlumberger, you know, strong charts, the oil services holders. If you take a look, let me just dial this up for 2 seconds, but the oil services holders is breaking out. If you look at that monthly base, right?
Yeah.
Goes back to 2019. But, you know, here's the thing. I don't think you can have strong energy, a strong dollar, strong bond yields, and have a recession. So one or the other is going to win out.
Yeah.
You know, you just can't have all of them. So, but right now, energy, bond yields, and the dollar are all trending higher. So we might get a... Go ahead.
Go ahead, Larry. I was wondering on your dollar chart if you had any upside targets or what you saw coming. It's been pretty relentless. The dollar hasn't given people pullbacks. What's it telling you?
It's in a strong uptrend. 1040 just crossed to the upside, you know, at 105.35 on this chart. You know, probably the first target, just by looking at it, 105.90. But it's trending. It's got a big base.
Yeah.
You know, and I don't know
why
why
a pullback to 103. You would love to see a pullback.
Absolutely.
Everyone would, and then they'll be afraid to buy it, or it won't happen.
Yeah, that's how it normally works.
Yeah. Okay, that's a nice looking chart.
It's a great chart. You know, and I don't, you know, if you would have told me that the dollar would be breaking out and crude oil would be breaking out, I wouldn't have thought that, but that's what it is.
Demand for dollars because it's still paid for in oil, still paid for in dollars.
Yeah, that makes sense.
So you know, sometimes the dollar weakens during a weak crude market because there's less dollar demand. Anything else standing out to you? I think we've covered a lot of ground. You probably had some things that you wanted to talk about before I started steering this thing.
You know, these financials are starting to break out. Like if you look at CME Group on the weekly, look at that. The weekly base is very strong. If you look at KKR, weekly base is very strong. So the financials. But
that's not a bank. KKR is a bank?
No, KKR is private equity.
Oh, okay. Okay.
Yeah.
All right. Because the banks, actually, Larry, a guy that I talked to was talking about do you watch option sweeps? There were a lot of option sweeps coming into the Citicorp of all of them last week, and they're buying the calls out to January. So there are a lot of people that agree with you. Sometimes those option sweeps are pretty good tells, aren't they? Or you don't want to fight them.
Yeah, you know, if you look at Citi, $40 on the Citi chart, I mean, going back to 2018, it's right at the bottom end of this. A lot of support down there, and the banks were strong. Last week, Citi was up 5%. JP Morgan was up last week. It was one of the strongest sectors. The S&P was down. JP Morgan was up 3%. But
they're rotating
the
here.
Why
would they rotate into the banks at this stage?
I don't know.
Out of tech.
I don't know. But this CME chart is really look at the CME chart.
Yeah, great exchange.
It's got a ton of support at 200. 200 goes back to 2022. You've got the 10-week moving average at 199. It's got a ton of support, 197. It's a really good.
And that's
chart.
Just about trading volume.
Yeah, maybe because maybe it tells you there's some more commodity moves coming.
Yeah, well, the S&P was anyway a lot of their contracts.
Yeah,
it's all about volume there. So there's plenty of trading going on.
Yeah.
I do have, one of our regulars, Alexander, would like to know what your view is on Oracle after it got hammered on earnings last week.
The weekly bar is really difficult, but it closed back over 110. It filled this gap. There was a gap a few weeks ago. It filled that gap. If I was looking to do something with Oracle over 110, I like the chart, but I'd have my stop right underneath last week's low, 107 and change.
Okay.
So it's, they pretty much washed it out. You can see the weekly volume was high, washed it out. If you take a look on the daily chart, it's going to be like anything right now. It's going to be a little bit more of a speculation. So what I'm doing for things that I buy right now is I'm just buying half size positions.
Mm-hmm.
And I want to get through the next 2 weeks. But Oracle was super strong. Their quarter was not that bad, but the market ran up 10 or 15% into earnings. So, from a speculation, I like it here. I would do a small position and I'd have a stop under the recent low.
In a New York minute, everything could change.
That's right.
Don Henley.
Yeah, that's the truth.
How about for me, Larry? What would you do with Apple? I'm a bear in Apple.
Yeah, Apple's a tough chart right now. So I don't have any long. The trend right now.
Would you buy it at 120?
At 120, I'd have to. I mean, at 120, probably, yeah.
Okay.
Yeah.
All right. Okay.
That's the weekly support, right? 123.
Yeah.
It's a tough chart. This Google chart. I don't know why the Google chart has been as strong as it has been, but it has been. Even last week when everything got taken down, it was higher for the week.
It's the last one standing. I mean, look at the 2 days Amazon put in late last week. It's threatening moving averages now for me. Look at it's going to be under your double band pretty soon. But that was a pretty lousy week. It wasn't a reversal week, but from where it was, it cleaned out all the shorts over 43.63, the July highs, and failed.
Yeah, it gave back. It definitely gave back a lot.
Yeah. Okay.
I don't, like I said, Dale, I can normally come on here and tell you, I think, in 30 or 60 days here.
110 Amazon by the next time I talk to you.
Okay.
All right. So anyway.
I'd probably buy it down there if it gets there.
Yeah, I would too.
Yeah. Cover your short.
Here's what I think is the most consensus narrative that we could have a 5% correct, 5 to 10 if you're real extreme correction, and then we'll be at new all-time highs by early next year.
That is the consensus. I would agree.
I hope it stays the consensus because I know there'll be a rally from 4,200 if we get down there. That's a battleground, right?
Yeah, 4,200 is the big number.
But something interesting, even the people I talk to that are, short-term bearish, looking for a correction, I don't even ask them this, Larry. but they always seem to want to come out and qualify that even though they're bearish, they go, but I'm not looking for a crash. But I'm not looking for a crash. I'm not even asking them, are you looking for a crash?
Right.
So people are, you know what I mean? That's been kind of wiped out of the sentiment. In fact, people are embarrassed to even be associated with looking for a big decline.
Right.
Which makes me think it's possible because people are coming out saying they're not saying it would happen. Do you know what I'm saying? The psychology.
There's very few crash bears out there.
Yeah, because they all crashed.
Right.
Right. Especially in July. I know. I lived through some of that. Okay, great, Larry. I mean, real nice looks. We'll see what happens here. I think maybe we're going to have one of those Octobers, huh?
Yeah,
You've
it's,
seen a few.
Listen, October, traditionally October through December are usually pretty strong. What do we get? The last major low was last October. What is it? Yeah, October 16th or something on the chart. But I just want to get through September right now.
Okay.
You
All
know?
right, well, you will.
Yeah. No, we definitely will. We definitely will.
So the best place for people to get in touch with you at LMT 978.
Yep,
or
at
you want to show your
LMT978 on Twitter, my website, Blue Chip Daily, and also on YouTube, also at Blue Chip Daily. And we've got a really good bunch of instructional videos on there. You know me, Dale, I'm all technicals and I don't get into the news and predictions and all of that.
Yeah, and you're very measured. I never hear you really get carried away with any narrative. You just talk about what the charts are doing. You're someone who lives the expression price is king.
That's it. The market knows a lot more than I do.
Larry, pleasure having you on, and it was great batting the ball around with you today.
Dale, thank you, my brother. I appreciate it, and I look forward to talking with you soon.
Okay, I'll talk to you in December or so. Okay, buddy?
Thank you, Dale.
Have a great fall trading season, Larry.
You too, my friend.
All right, buddies. Larry Tentarelli, everyone at LMT 978, who joined the team in about 17 minutes on the Morning Edge. We'll be with you all week, everyone. So good hunting today. See you tomorrow. Turn around Tuesday. Oh, yeah. Don't just count your pips, count your